Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Wednesday, January 31st, 2018. I hope you guys have been staying on the right side of the market. We're finally starting to get some volatility into this market, and that's last week when I had put the free video out. That's actually what I was mentioning. Actually, it was on the 17th. It was 2 weeks ago. But things really have been starting to line up, and there's a lot of people out there that are still holding out for a parabolic move, and it's yes, can it happen? Of course it can, man. This market's been really, really strong. Do I think they're going to be lined up for some disappointment? Absolutely, I do, and I think that right now the mentality out there is, just buy the dip, buy the dip. But what's going to happen is that once we start breaking through major support levels, the people that are buying the dips are going to start selling and panicking, and what happens is it turns into it could turn into a waterfall to the downside, and it makes sense from an Elliott wave perspective. It makes sense from Woody's technical timing indicators, and it also makes sense from sentiment. So basically that's really the way that we line up the market is through Woody's technical timing indicators. That gives us when to start looking for a top. Now we were looking for it. Actually, it was about a week ago, and the market extended higher. But what happens with that is it gives us we know when to anticipate when the low is coming in. So even though the market did not turn on that particular date, it doesn't make the long side any safer, because you're still within a bearish time period, and we know when the low is supposed to be coming in. We know we had sentiment that was at extreme levels, and also just through emails saying that we're crazy looking short because we are in 1920s type market move, and we're in a parabolic move, and it's those types of emails kind of it really gives me more confidence that a top was coming in, because it's telling me that nobody is anticipating any kind of drop at all, and I still don't think they are. I see it from different newsletters and stuff that I read that they're just picking where to buy this dip, and like I said, what happens is they continue to buy, and these portfolios that are up fantastic because this market's been on a ride starts to shrink and shrink and shrink, and then I'm pretty sure that right when we're about to come to some type of low, you're going to see everybody panic and sell, and that's going to be the probably the next buying opportunity, and it's going to line up for new highs, and I'll go through all of that. And like I said, we have the time and we have sentiment. We then use the technicals and I use the Elliott wave and just regular bearish and bullish divergences. And the thing is, even though there's we have a time period to be expecting the low, there's going to be moves in between it, especially on the downside. And that's I really, I prefer when the market goes down like that, because volatility goes up and you're able to trade both sides. When you have kind of a melt up like we've had since August, nothing really happens. It's just a boring market. But what happens with that is everybody believes they know what's going on, and the simple answer to that, to what everybody thinks is going on, is just buy every dip because the market's going to go up, and they've been right so far. But as you know, in the market, you're right until you're wrong, and when you're wrong, the psychology of it you don't believe you're wrong. So what happens is you go underwater with your trade, and then from there you average in, and then you average in, and you average in, and then you panic. And when that happens, that's usually when sentiment's going to go to extreme bearish levels. And the same thing goes on the upside. When people are short the market, they continue to layer in and average down until they panic, and then from there we get extreme sentiment readings. So excuse me. The stock bond ratio, I'm just going to go over some of the things that we went over in the previous one, because I can't really go over too much what's in our current reports. But with the stock bond ratio, what are you saying is that we are, there's a generic, the picture is suggesting for a generic equity high in 2018 and a low in 2021. Now, this got a ton of emails saying that we're absolutely insane, but unfortunately, even when you go back to, old times when the market did go up, it takes pauses. But in this market and in this environment, when there's algorithms and computer trading all the time, these moves get exaggerated. And it doesn't mean that we have to have a type market like in 2008 when everything was just an outright panic to the downside. No, we can get just choppy market where the market stops going straight up and we get big moves up and down, and that carries on for a couple of years. But that's down the road. During that time period, the reason why I like it personally is because we're going to have volatility, and that's when sentiment works. That's when timing indicators work. That's when technicals work. When things are just going straight up, nothing works. You can't look at valuations. You can't look at technicals. Sentiment gets blown out of the water. Timing half the time gets thrown out of the water. But when the market is going, when there's volatility put into the equation, now everything starts working again. And like I said, I put out an email for you guys, the free one, saying when the market was gapping up, I forget the day, it was in the morning, and I said if we are ever going to get a complete reversal, it's going to be today, and the S&P reversed 30 points that day. That's the type of volatility that that is good to trade, because everything works, and that was a pattern, and it worked out to a T. And now it appears that we've made an important top. So that's this is what is going to be coming down the road. And I know a lot of people will fight this and disagree, and you know what, down the road they may be right, but I've followed Woody for long enough to know that you really don't want to be on the other side of it. So again, on the 17th, what I was putting in was that I was looking for a volatility spike that was going to be hitting in the market. And if we take a look at the VIX, this was the 17th. This is when I put that report out. And the VIX, closed at 26, and right now it hit a high of 31. So the volatility anticipation gave us it's almost a 20% gain on that. But if we take a look at sentiment, you can see why we get the emails from people saying that this market's never going to go down, because everybody is bullish on this market. The only direction they see is up, and right now, the move that we've seen over the past couple of days, everybody's just looking at it as a buying opportunity. But what if it's not a buying opportunity? I'm sure a lot of people in that 2008 period when everybody was bullish on the market was using that as a buying opportunity. And what happens is they probably all panicked when the S&P was at 600. Now, I'm not calling for that kind of move, and that's just a longer time period, but I'm just showing you why from a sentiment view, why nobody's going to believe this market when it's going down, because they've bought every dip and it's worked. So you can see sentiment's been at extremes. We had a big drop. It only hit 16% sentiment. And on a longer term, this is where, we had the spike high. From here, we had a sentiment divergence. And that's really was the clue that we were going to get some type of pullback. So if we take a look at the regular charts now, this is the daily chart on the S&P. And if you don't know Elliott wave, the only thing you have to know is you count 5 waves. It's 5 waves up, and then, I'm not going to go through all that, but you have to count 5 waves up. And typically when you complete a wave 3, wave 4s go anywhere from 23 to 38%. To the downside. So you can see if it just does a 23% retracement from this low to this high, it brings us to 26.21. That's over 250 points to the downside. So if we get that move, do you really think that everybody who is just buying this every single dip on the way here is going to believe that this is still a buy the dip environment? No, they're going to panic, and most likely it's going to bottom in this area, and this is going to be the buying opportunity that Woody's talking about, and it's most likely going to come very close to those, the turn dates that he has in place. And from there, we're going to get a wave 5 up that most likely will take out these highs. And the reason why let's say that the 2-year forecast works is because once this wave 5 completes, this is a weekly chart. This is going to complete a wave 5 on a weekly. And again, if we just use the regular, Elliott wave things, from this low to this high, a 23% retracement is 2350, and a 38% retracement is down to 2,000. So again, everybody that's looking for the parabolic move and they're going to buy every dip, are they going to stay long 800 points to the downside if that was going to take place? But again, if that did happen, it's a buying opportunity for a move probably up to the 5,000 marker. So that's why right now it's great to see volatility, because this is what I've been following. This is now the 60-minute chart, and you can see we have 1, 2, 3, 4, and this is our wave 5. We had the bearish divergences. We had the time period where we were looking for the reversal to the downside, and we knew we had sentiment that was at extremes. And again, everybody was just looking for a straight up move, and from there we got a nice break to the downside. But with that said, now I'm going to go with the very short term and look at the S&P and say that should you just go short right now? No, we have bullish divergences here. If it goes down, this is the support area you want to keep an eye on. The 2814 down to the 2800. If it breaks through that, there's going to be a panic low down to 2764. If it goes up, you want to keep an eye on this resistance zone. I think that's going to be a shorting opportunity, but there's a shot that we could be down at these levels when our low date is coming. And like I said, that's going to be the next great buying opportunity before we have the next move to the upside. So right now, I have it in that this wave 5 is complete. I think you're going to see volatility continue, but tomorrow I would not be surprised to see a move to the upside. Keep an eye on this resistance zone. If it gets held down, most likely we're coming someplace down into this level here. So until next week, have a great night, and I'll talk to you guys in a moment.